Listen to me. If you are standing on the precipice of retirement, or if you have already crossed that finish line, I need you to lean in and listen to me very, very closely. Right now, you are facing a massive transition, not just in your daily routine, but in how you handle every single dollar you have spent a lifetime working for. For decades, your banking relationship was built on a single premise: accumulation. You deposited a paycheck, you paid your bills, and you hoped the rest would grow. But the second you transition into retirement, the game changes completely. The goal is no longer just accumulation, it is preservation, liquidation, and security. Yet, so many of you are entering this critical phase of life using the exact same checking and savings accounts you opened 20 or 30 years ago. And I am here to tell you that is a mistake that could cost you thousands of dollars in unnecessary fees and lost interest. Let's address the elephant in the room. What is the real fear here? The fear is running out of money. It is the terrifying thought of watching your nest egg slowly erode because you made a misstep. And because of that fear, you crave safety. You want to know that your money is secure, and you want to know that when you need to pay for groceries, utilities, or a medical bill, that money is right there, accessible, without hoops to jump through. But that craving for safety often leads you right into a trap. You walk into the big brick-and-mortar bank on the corner, the one with the massive columns and the familiar logo, because it feels safe. It feels permanent. You open what they call a senior account or a retirement savings account, thinking they are looking out for you. Do you want to know the truth? Most of those traditional, big-name banks are taking advantage of your desire for comfort. They are paying you a measly 0.01% or 0.02% interest on your hard-earned savings. That means if you have $100,000 sitting in a traditional savings account, you are making maybe $10 or $20 a year in interest. Meanwhile, inflation is eating away at the purchasing power of that money every single day. On top of that, they flip the script and hit you with monthly maintenance fees if your balance drops, or paper statement fees just because you prefer to get your statement in the mail. It is an absolute travesty, and you need to put an end to it today. So the question you must ask yourself is this: what actually makes a bank the best retirement bank for a beginner? It is not the bank with the flashiest commercial. It is the bank that honors your stage in life by offering 3 non-negotiable pillars: 0 predatory fees, maximum yield on your cash, and flawless accessibility. You do not need a complicated, multi-layered institutional setup. If you are a beginner, you need a streamlined system that works for you, not against you. To build the system, you have to look beyond the traditional branch down the street and look toward high-yield, online-first banking institutions. Now, I know what some of you are thinking. Susie, an online bank? That doesn't feel safe. I want to see the vault. I hear your fear, but let me reassure you. As long as an institution is backed by the FDIC, the Federal Deposit Insurance Corporation, your deposits are federally protected up to $250,000 per depositor, per account category. $1 insured at a top-tier online bank is just as safe as $1 insured at the biggest bank in the world. The difference is, because these online institutions don't have the massive overhead costs of maintaining thousands of physical buildings, they pass those savings directly to you. Look at institutions like Capital One 360, Marcus by Goldman Sachs, or Discover Bank. These are perfect examples for a retirement beginner. Why? Because they strip away the garbage. They offer high-yield savings accounts that currently pay around 3.30% to 3.65% APY, or even higher depending on the environment. Compare that to the pennies your traditional bank is giving you. On that same $100,000, you are talking about making over $3,000 a year in pure, passive interest versus $20. That is real money that can cover your property taxes, your insurance premiums, or your groceries. And best of all, these specific institutions have no minimum balance requirements and absolutely 0 monthly service fees. Furthermore, let's talk about accessibility, because this is where the strategy shifts for a retiree. When you are working, you had direct deposit hitting one checking account. In retirement, your income is likely piecemeal, a social security check here, a pension deposit there, and occasional required minimum distributions or voluntary withdrawals from your traditional IRA or 404 account. You need a bank that acts as a seamless traffic cop for this cash. Capital One, for instance, is brilliant for beginners because it bridges the gap. You get the stellar high-yield online savings rate, completely fee-free checking, and if you truly hit a wall and need to speak with a human being in person, you can walk into one of their physical cafes or branches. You get the best of both worlds. If you want a pure, set-it-and-forget-it fortress for your cash, Marcus by Goldman Sachs is incredibly stable and consistently ranks at the top for customer satisfaction. They do not offer checking accounts, which for some of you is actually a blessing because it protects your emergency reserve from everyday impulse spending. You link it directly to your primary local checking account, and you can move money back and forth with electronic transfers that often clear the very same day. Your actionable takeaway right now is to stop being loyal to a bank that is not being loyal to you. I want you to take out your latest bank statements. Look at the interest rate you are earning. Look at the fees you are being charged. If you are earning less than 3% on the cash portion of your retirement portfolio, or if you are paying even $1 in monthly maintenance fees, you are officially permitted to fire your bank. Go online this week. Open a high-yield savings account with an FDIC-insured institution like Capital One, Marcus, or Discover. It takes less than 10 minutes to set up. Link it to your existing account, transfer your cash reserves over, and start forcing your money to work as hard for you as you worked for it. You have earned the right to peace of mind in this chapter of your life. Do not let outdated banking habits stand in the way of your financial security.